Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is TV shows. How did they die? All right. And our special guest today is Michael Morrongiello, president of Bay Area Wealth Builders. And Michael's been investing in real estate since the early 1980s through 6 different prior presidential office holders. I like that. And has experienced his share of upside and downside cycles. Michael, welcome to The Best of Investing. Again, we've had you on a few times.
Yeah, thanks, Edward, and good to see you and Nam again.
Yeah, likewise.
Good. So let's just get right into it, because here are the topics that we're going to cover. Then we'll do one at a time here. But uncollected rents, delayed forbearances and foreclosures. Is this a ticking time bomb? Virus trending down, vaccines trending up. What does that mean for real estate? Key leading indicators that one should keep an eye on. How long will this imbalanced supply-demand housing shortage last? And what are the prospects for another real estate market crash in the U.S.? These are all great topics, Michael, that you wanted to cover. So let's just go one by one here. Uncollected rents, delayed forbearances, and foreclosures. Is this a ticking time bomb? What do you think?
Well, we got a lot of ground to cover, as you said. So, yeah, we'll get right into it. The rents that have been uncollected now for many landlords has now been pushing well over a year. And it looks like end of June, early July is when some of these moratoriums are going to end. So there's a lot of anticipation on both sides of this issue that when that moratorium ends, we're going to see a dramatic increase in evictions, hence bringing potentially more properties on the market for sale, because a lot of landlords may decide to exit the rental property business. Is that going to, maybe affect values to some extent? My take on it is that it is far more overblown than I think is being played out to be. I don't think it's going to be a critical mass issue. I do believe that, yes, a lot of these people that have been working the system, or as we like to say, gyp the sys, they've been working it for the last year, some legitimately. There's been hardships as a result of COVID, as a result of economic, hardships for them. But there's also many that, quite frankly, recognize that the end is at hand. They're going to have to pony up and pay the rent or not. Now, the state of California has earmarked billions of dollars, I believe, for assistance, some sort of rental subsidies that you and I as taxpayers will help foot the bill on. And that's not a great thing because it just keeps delaying the inevitable. But I don't think it's going to be that dramatic. So yes, there's going to be some pain, but I don't think it's going to affect the real estate market dramatically.
Okay. Michael, you bring up June as a time frame. Is that I saw a article today said federal judge lifts nationwide eviction ban. Is that what they're saying in that article, or generally that June is the time frame?
Yeah, no, actually that's a different issue. That's an issue where landlords brought a federal suit against the CDC, stating that they had no authority to impose restrictions on property rights. And they were successful in that lawsuit, where the courts have agreed that you're right. The Center for Disease Control should not be dictating property rights or restrictions on property rights to the landlord. So it's not going to accelerate, I think, the June date, but it does show that the landlords have been pushing back and finally have a little bit of a victory, if you will, after all this time.
Well, so my point that I brought up before was, it's one thing to push this harsh rules on the landlord saying you can't evict for non-payment, and then to give money to the tenants, it seems like kind of a double whammy. I mean, what they should have done was just say, you know what, we're going to give that money to the landlords, because why should the landlords have to pay for the tenants' COVID issues? I mean, the landlords may be dealing with it themselves too, and it's not their fault.
Yeah.
right?
Yeah, I mean, this is as stating the obvious. This pandemic, this downturn is probably one of the worst, if not the worst, economic and crises that we've ever experienced in our lifetime, unless we were around in the 1920s.
Yeah.
No.
Yeah.
It's interesting. You're right. I think it's not going to be, I think it's overblown. But in some ways, it'll be similar to the Great Recession with respect to some tenants are probably doing sort of like strategic defaults, right? They're getting away without paying. In the meantime, rents are potentially going down. Do they think they can, leave their current property and then get rent somewhere else for less? In the meantime, they haven't paid a single dime in
Yeah,
rent.
they might try to use that as an angle to renegotiate their rents. I think you're going to see that more in the commercial sector, where they're going to really be pressuring the building owners, to lower their rents or recast the leases, or to just. We actually heard of a situation on a commercial building this past week where the landlord was willing to let the tenant out of the lease just to vacate, so that they could then have a better shot at releasing and not having to get into drawn out, protracted litigation.
Yeah, no, I can see it. And here's the thing that's going on right now is building costs are going through the roof. So it's going to be difficult to find builders willing to build at reasonable prices that people can afford. So we're going to still have that housing shortage, in my professional opinion.
One more comment on this uncollected rents thing too, and that is you mentioned it. And that is that many landlords too have sought refuge for forbearances, because if they're not collecting rent, they have now gone back to their lenders too.
Exactly. Okay, hey guys, we're going to get to our first commercial break. And again, as a reminder, Michael, if you know the answer, don't say anything until we get back from break. All right, first trivia question. In Seinfeld, how did George's fiance die? That's our trivia question. Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which, by the way, is worth over $100. So that's a pretty good gift. Let's see. Again, here's the trivia question. In Seinfeld, how did George's fiance die? All right. Stay with us. You are listening to The Best of Investing. Don't touch that dial. We're going to be right back with Edward Brown, Nam Phan, and Michael Morrongiello talking real estate. Well, welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and our special guest, Michael Morrongiello. First trivia question, talking about TV shows. How did they die? In the TV show Seinfeld, how did George's fiance die? Michael, do you remember Seinfeld?
Yeah, I'm going to call a blank on that. I'm not a Seinfeld fan.
Okay. None?
Food poisoning or something like that?
Close. Licking poison glue on the wedding envelopes.
Oh my goodness.
Kind of a strange one there. Okay. So, Michael, you are quite an expert in real estate. In fact, you have you're the president of and founder of Bay Area Wealth Builders, which is kind of like a meetup group. Would you kind of put it in that term?
Yeah, I would say we're sort of a pseudo meetup group, a networking group. I mean, it's a group of individuals that have been getting together now, going into our 21st year.
Wow.
Of having live meetings, of course, up until COVID, where we get together and we talk about how to buy and sell and lease and manage and option and exchange real estate. And it's attended by people from all walks of life, both what I would call a beginning real estate investor to the seasoned pro that's been at it quite a while. So it's really a great group.
Yeah, I've attended a couple of them. I've been quite impressed with not only your knowledge and the topics of the day that you cover, but also the guests you've had. So well, let's give a shout out to that. How do people get a hold of you/Bay Area Wealth Builders? Yeah,
let me give the website and I'll give you the information phone number. That'd be the two best ways. So the phone number is 707-996-6411. Again, that's 707-996-6411. And they always can go to our website and get more updated information on events that we have coming up, or sometimes we have some workshops we're sponsoring. And that would be found at the Bay Area Wealth Builders website, which is bawb.info. That's bawb.info.
Okay.
Hey, Michael,
go ahead.
I was just going to ask some questions. I've attended a few of your events, and they're really informative. And it was when I first joined Pacific Private Money. What is there a specific real estate asset class that you guys focus on, or is it residential to commercial, or is it really just kind of what's trending?
You know, a lot of it is what's trending. The concepts, the discussion really can be utilized for most any type of real estate, because we do get into marketing discussions, financing discussions, negotiating discussions and tactics, paperwork, if you will, profitable clauses to protect one as a seller or buyer. But most of their focus would be more on the 1 to 4 family, because that's a lot of our audience. But we have some very successful commercial real estate owners and operators and multifam owners that come to our meetings because, again, they like to rub elbows with other people that are like-minded.
Yeah.
Sometimes you just never know. What do they say? You're one person away from
6 degrees of separation.
Yeah, exactly. Just one extra. I tell you, it's funny. I've gone to some networking groups where it's like, the group itself was just kind of okay, but I just happened to meet the one person, and that one person just branched out into other things. It was really, really good.
Yeah.
Really well done. Okay. Next question we have for you here is the virus trending down, vaccines trending up. What does that mean for real estate?
You know, those are two interesting trends to see that are happening right now as of this date here, and that is that the hospitalization rates are low or trending down. The death tolls, of course, seem to be waning a little bit as well. So those are real good, favorable views. And as far as vaccines and vaccinations, I think if you're, depending on what age group you're in, if you're 70 or older, I think it's almost like 80% now of the population is being vaccinated now once or at least twice. And of course, now that's filtering into the other age groups as well, because they've opened it up. So bottom line is all of this, I think, is very positive. It's been long overdue. I can't see that this is going to do nothing more but help people and assuage some of their fears about, getting back into more what we call quote unquote normalcy.
Gotcha. Okay. And what key leading indicators should one keep an eye on?
Well, I'm going to quote and talk a little bit about my good friend Robert Campbell. Many of you may or may not know him, but Robert is a UCLA statistician and real estate economist. And we actually have him come into the BAWB meetings once a year to give us a housing forecast. Now, we couldn't do it this year because of the lack of live events, but he wrote a wonderful book called Real Estate Timing. And he's a timing expert. He believes that is probably one of the more critical aspects of owning property, is the timing of when you acquire it and when you may exit from it. So he's fond, and I'm going to paraphrase a little bit about what he talks about, the 5 key leading indicators that he looks at that are very telltale signs about what could be going on in the marketplace. Number 1 would be existing home sales. Are we in a robust time where sales are happening very frequently, or is it a slow time? I think the answer to that right now at this point in time is we're in a pretty frenzied market right now. The second thing is new home building permits. And that is, do new home builders, ground up construction builders, are they seeing confidence in the marketplace to go through that whole process, which is a protracted process to build new construction? Again, right now at this point in time, new home building permits are up. They've increased in the last year and a half. The third key leading indicator is the NODs, and for those that don't know what an NOD is, notice of default. And notices of default are usually indications that there's distress. People are behind on their loans and they can't get caught up. Again, at this point in time, there's not that much of that activity going on. Yes, there always will be some, but not that much.
Well, one quick question on that, though. On the NODs, a lot of it could be that the banks just have not filed them.
Because of the moratoriums.
Yeah.
Well, that's true. That could be artificially skewed at the moment. And that'll also dovetail into the next key leading indicator, which is my 4th one, and that is foreclosures or trustee sales.
Okay.
Are those up at the moment, or are they down at the moment? And arguably right now there's really not that much activity happening in that area. It could be, as you suggested, that it's because of some moratorium, but I think it's really more a function of the marketplace, that there's just a lot of people now that have equity, that have other outlets to help solve their problem. And then the 5th one, if you will, is interest rates. Is seeing where interest rates are. They've been at historically low levels now, under 3%. That's been unprecedented, in our nation's history. And I'll throw one bonus one in there. And the bonus one is as a leading indicator, I like to call a leading indicator, unlike a lagging indicator. Lagging indicators are what appraisers tend to look at, and that is, and agents look at, and that's sales that happened weeks or months ago.
Yeah.
They're looking at what happened, in the past, in their rearview mirror. A leading indicator would be a one that would be what is the percentage of sale versus listed price.
Mm-hmm.
Gotcha.
So if we're selling at listing or above listing, that's a good indication, rather than a smaller percentage of listed price.
And when we come back, we're going to ask you about how long this imbalance is supposed to last. Here's our second trivia question. Again, the theme is how did they die on TV? In the TV show 2.5 Men, how did Charlie die? Now, if you remember, Charlie was Charlie Sheen, and then Ashton Kutcher came in to take his place. All right. But they actually did say how Charlie died. They had to kill him off because of all that craziness that was going on in his personal life, right? All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. One more time. On the TV show 2.5 Men, how did Charlie die? All right. Stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown, Nam Phan, and Michael Morrongiello here. And Nam, I can see in the background your cat walking on the back.
Yeah, she almost jumped on my laptop,
Yeah.
which she does.
That's great. All right, first of all, our trivia question that on the TV show 2.5 Men, how did Charlie die?
Food poisoning.
Yeah, again, they're looking more info.
Auto accident?
Close. He got hit by a train, apparently.
Oh,
they
wow.
never showed anything. They just kind of said it in
Yeah.
passing. All right, Nam, you wanted to ask Michael
Yeah.
still about the leading indicators.
Yeah, just at the end of the last segment, Michael, we were talking about leading indicators versus lagging. You were talking about sales to list price or list to sale price.
Right.
What are you seeing in the marketplace? Because we have realtors on the Best of Investing show all the time, and the sounds like the list to sale price, the sales price is over 100% of list.
Right.
And it's been that way for a while. So what are you seeing out there in terms of
Well, as I said earlier today in our segment, this is a very frenzied, robust market. It's a great time to be a seller at the moment.
Mm-hmm, mm-hmm.
And you're right. That's one of the things that's telling us in almost real time, are properties selling at or above listed price or lower as a percentage of listed price? Right now, many of them are selling at listed price or over if they're priced correctly. I'll share with you a very recent story about a friend of ours in the DC area. Now, a lot of people in the Bay Area are crying, well, this is a crazy market and I can't get a house and I don't want to get caught in these bidding wars.
Yeah.
This friend of mine sent me an article about DC. We think we'd have it bad here. The gist of this article was that there was a pre-listing coming on the market, and the agents put it out there, and they had 120 people through the house before it actually went into MLS. Once it went into MLS, there was 110 showings over a period of a week.
Wow.
And they had 25 offers on this house. Many of the offers were cash, and the lucky couple who ended up buying the house was lucky enough to buy it for $250,000 over asking price.
How much was the asking price?
The asking price, I believe, was $990.
Wow,
And,
that's a 25% more. Wow.
And so the gist of the article was, this is no longer just buying a house. This is trying to win a house.
Yeah.
That it's become like almost a lottery atmosphere. So yeah, to your point, that is a good indicator to see really real time what's happening with trends right now versus the lagging indicators, which is looking back as an appraiser does or agents to see, oh, well, this house sold 3 months ago for this. This house sold 4 months ago for this, which are more lagging indicators.
Yeah. So, I mean, if you're in your Bay Area Wealth Builders group right now and you're having this conversation with real estate investors, I mean, if I'm interested in buying real estate, this is probably not the time. It's probably, good deals are going to be really, really hard to come by. But if I've been holding real estate, I guess the question is, if I acquired it, 10 years ago, should I continue to hold, or should I pull some money off the table and sell? I mean, I'm sure that these are top of mind
Right.
discussion.
Everything's based on alternatives, right? So
Well, you know, whenever you sell, you remember you have other things that come into play, like taxes.
Yeah,
And that's
taxes
and I'll just ask you and the audience this question: do you know anybody with highly appreciated real estate these days in California?
yes.
I mean, the answer is that's a rhetorical question. The
Right.
answer,
Oh,
if you nod
no,
your
I
head,
thought I was
yes.
going to win a prize for answering correctly. Go ahead.
Right. Right. So there's a lot of people that you are in that boat, and they're asking themselves the same thing: should I sell? Should I wait? That's going to be a personal question. I would just push back on you from one thing, and that is that there are always opportunities, whether we are going up, going down, or sideways. There are always going to be value-added opportunities. A good example is, let's say, in a marketplace like maybe Mill Valley or Southern Marin County or another sort of affluent area in the Bay Area, where you can buy property, maybe do an addition, and you know the addition might cost you $400 or $500 a square foot to add on, but yet the price per square foot on the resale side is $1,000 to $1,200 a square foot. That's like printing money if you're able to navigate those waters and have those skill sets.
See, the interesting thing is, from the tax standpoint, El Presidente is trying to get rid of course, they always talk about this, trying to get rid of 1031 exchanges, thinking, oh, well, this will, put more money in the coffers. But the problem is, I'm going to give a little economics 101 here. If they would say, forget the 1031 exchange, getting rid of it, what they'll end up doing is stimulating the economy, because you'll have a lot more agents making commissions and escrow officers, potentially the real estate taxes going up, et cetera, et cetera, et cetera. Because right now, if with appreciated property, if there's no incentive, or there's a big disincentive to sell because of taxes, people are going to sit on the sidelines and just wait. And unless you're going to go in their pocketbooks and say, listen, Mr. Homeowner, your house went from 700,000 to $1 million, a value-added tax, we're just going to tax you anyway, whether you sell it or not. I mean, talk about socialism, communism, Marxism, et cetera, et cetera. But yeah, I'm waiting for that day, unfortunately. Michael, how long do you expect this imbalance to last?
Well, you sort of dovetailed on some of the other issues that one needs to look at that could change the dynamic of this marketplace. And yes, that sausage making is going on right now inside the Washington, D.C. Beltway with regards to tax policy. And there is a lot of discussion about increasing capital gains tax rates, doubling them from roughly 20% to 40%. There's talk about corporate tax rates going up as well. There's talk about, as you mentioned, the curtailment of 1031 or tax deferred exchanges. But the big one I don't like is the stepped up basis elimination that's being discussed, where not just real estate, but any asset that you might acquire with a stepped up basis previously, be it stocks, bonds, real estate, or other assets, that is also under attack potentially as well. So depending on what gets through and gets pushed through, and we'll probably know in the coming months as this sort of crystallizes, that could have a profound effect on the psychological view towards real estate and whether, people want to still play in this sandbox, if you will.
Yeah, and actually the best thing they could do is lower capital gains taxes to, let's say, 9%.
That's not part of their religious belief.
But you know what? Isn't their religious belief, let's get more money in the coffers, or is it just punish people who have money? Because if they want more money in the coffers, lower capital gains tax, give people this quick, and even say, listen, we're going to do it for 1 year. You'll get so many people selling and paying their taxes and getting rid of it. So sort of like a Roth IRA. You just say, I'm going to go ahead, bite the bullet, exchange, transfer from convert from a regular IRA to a Roth IRA, bite the bullet, pay the taxes. All right, here we go. Here's our third trivia question. This one goes back in time a little bit. Remember the TV show MASH?
Yes, sir.
How did Colonel Henry Blake die? That's our trivia question. Call 888-912-1190. First caller with correct answer is going to win that tanning certificate worth over $100. In the TV show MASH, how did Colonel Henry Blake die? All right, stay with us. The Best of Investing will be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Nam Phan and our special guest, Michael Morrongiello. Third trivia question. In the TV show MASH, how did Colonel Henry Blake die?
Food poisoning.
You know, I was just thinking a disease of some sort, but I'm not sure.
No, he got a helicopter crash over the Sea of Japan.
Oh my goodness.
Yeah, it's a very famous episode on MASH. Okay, Michael, last question for you is, what are the prospects for another real estate crash in the U.S.?
Well, that's the million-dollar question, isn't it?
Yeah.
That everybody's wondering, as Nam asked also a few moments ago. And my take on it is that there's a lot of positive things happening right now. Consumer confidence is strong. The employment numbers that are coming out look very positive. Again, the economy is sort of kicking back into gear. This vaccination that we talked about earlier, the increases there and the decreases in the virus cases, all of those are positive outlooks that I think are going to bode well short term for real estate. I don't see a crash on the horizon, but again, my crystal ball only looks out so far. I do think that some of these issues that we touched on in the last segment about the taxation policies, about possible inflation coming into play, which will cause rates to rise, could, start changing that supply-demand balance, and that may change the dynamics that exist in the marketplace, where many buyers might say, well, maybe now's not a good time to make a big purchase decision, and maybe we'll sit on the sidelines, thereby increasing supply, thereby changing the dynamics where the sellers have the upper hand right now.
Gotcha. Thank you so much, Michael. Stick around. Hey, Nam, we're going to move over to you for a minute. You are one of the, you're a manager at Pacific Private Money, and you guys have 4 different funds.
Yes.
You guys, how do people know about the 4 different funds? Like, do you have summaries on each one?
Yeah, absolutely. So you're talking about the Pacific Private Money Fund, which is our legacy fund, the Pacific Freedom Fund, which is the next fund we launched. Actually, it's 1-year anniversary, I think last month, followed by the North Star Capital Fund, which is a ground-up construction fund, and lastly, the Pacific Southwest Note Fund, which is a Texas-based note buying fund. You can get information about all of those just on our website, which is www.pacificprivatemoney.com. We can also email that information to you if you give us a call, which you can call us at 415-883-2150. And also you can learn about them sometimes individually, or we've had webinars in the past where we go into detail about the specifics of each fund or characteristics, and those can be found on our website as well. So really go to our website, and under invest, you can see the 4 different kinds of funds that we have. And we provide a kind of a summary slide on the website, or a summary grid that compares each of the fund's characteristics, whether it's the amount you have to invest, the minimum investment, or the return profile, the asset characteristics, like what kind of properties do we lend on, and there's some differences among each of the funds, and really the best place to go is on our website. And what may drive an individual investor's decision to invest is, how much do I want to invest, and what's the minimum? What kind of return am I looking for? Aggressive or something more conservative? And how long do I want to stay invested in one of the funds? So all of those can be answered just on a grid, or giving us a call.
And can you give us a deal of the week?
Yeah, this is a sort of deals of the week, or I'd like to talk about some of the trends like Michael talked about. And, they're similar to what Michael is seeing in the marketplace. Obviously, a lot of the deals of the week these days are bridge loans, where, people are moving and or want to take advantage of this hot market, but they know they can sell their home, but it's where are they going to move? And if they list their home, they're going to get an offer right away if it's priced right, or if it's in great condition, or even if it's not, chances are they're going to get a lot of offers, just as not as much as if it were turnkey. But problem they then have to face is, where am I going to go? And it's competitive. I don't want to compete against 20 other people and then lose out and already having sold my house. I don't want to have to rent. So we do a lot of bridge loans. And we've been talking about that for over the last year. But what we're seeing a lot lately are multifamily deals, borrowers who acquired a property or want to acquire multifamily, and are going to do some work on it. And whether they buy and hold it, most of them are, they're just taking advantage of the market right now and acquiring multifamily residential properties, or in some case, small commercial. They're seeing opportunities in the commercial space.
Now, you say multifamily, are they actually apartments, or are they more like duplexes?
More like duplexes, anywhere from 4 units on up to small apartments, like 9 units, 10, and larger. But some of the larger ones, we just don't fit our sort of buy box, our lending box. But we're just seeing a ton of that activity. So we're seeing stuff from residential to multifamily to commercial. It's a really vibrant market across a lot of different asset classes, where, in June, July of last year, it was mostly just residential. Now we're seeing a lot of just mixed different types of properties.
But you don't do much in the retail space, do you?
No. I mean, we'll get commercial, but we don't have buyers for retail right now. There's still, well, certain kinds of retail, but I think that's going to open up too. I mean, and one leading indicator for me is trying to drive from here to San Rafael at 9 o'clock, and all the traffic that we have to deal with now versus 6 weeks ago.
Yeah, that was one good thing about the pandemic, was the roads were kind of clear.
Oh, isn't that nice?
Sure.
Yeah.
Except people were driving about 85 miles an hour in 25-mile-an-hour zones. That wasn't good, but other than that, it wasn't too bad. And before we get to another break, again, Michael, how do people get a hold of you or Bay Area Wealth Builders?
Yeah, thanks. Sure. They can do it 2 ways. They can call our information number, 707-996-6411. Again, that's 707-996-6411. Or they can go to our website, and that's www.bawb.info. Again, www.bawb.info.
Okay. And again, Nam and I have been to a few of your events, and they always have enough good information that's definitely worth going to. And Nam, how do people get a hold of you if they are interested in Pacific Private Money's funds?
Yeah, if you're interested in the funds, or if you are a realtor or borrower needs capital to close on a deal, give us a call at 415-883-2150, or visit us at www.pacificprivatemoney.com. And there's a lot of information there. Maybe in the closing segment, we'll talk about potential, live events. Hopefully we can plan it. Hopefully Michael will be having some too.
Hopefully soon.
Yeah. Are there any webinars planned, or are you just waiting for it to open up for a live event?
I think, we'll probably do one more webinar. I would say it would be June at this point, but hopefully by mid-summer, we'll be back on the road.
Very good. All right. No trivia question here, but stay with us. The Best of Investing will be right back with some closing comments. Well, welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money and Michael Morrongiello of Bay Area Wealth Builders. Nam, you were going to take it from here.
Yeah, we were just talking about during the break, when we're going to have live sessions again, and we'll probably do one webinar in June, and then after that, we'll hopefully certainly California feels like it's ready to open up, and we'll probably hold a live event. But, our events typically, can hold anywhere from 25 to 35 people, or that's typically how many people attend the events, and we usually have them at hotels. But it sounds like maybe the hotels aren't necessarily ready to have us yet, some restrictions.
And I'm going to guess that it really has nothing to do with COVID itself. It's more of the legal liability. I'm saying,
I have to imagine.
We're trying to do everything we can to, because in case anybody gets COVID. Of course, I don't know how they would pinpoint it back to the hotel seminar, but that'd be a little bit challenging. But it's all about the attorneys, really.
Yeah, we don't want to make any headlines. Pacific Private holds a super spreader event and puts California back from yellow to orange. So no, but I think by mid-July, things will be different, or August. A lot of people will have been vaccinated, and we'll be hopefully well within the yellow tier, or whatever the last tier is before things fully open up. But we we'll hit the road again, and I'm really looking forward to that.
Yeah.
There's a lot of events that we've held back on attending and hosting as well. But I think in the fall, we're seeing events starting to pop up.
Yeah.
California, Las Vegas. I mean, some states, are fully opened.
Florida. Yeah.
Florida, Arizona. So we're excited to hit the road again and really make 2021 make up for 2020.
Yeah. Michael, when do you think you guys will be full force getting together?
It's hard to predict, but I think it's around the corner, and it is coming. Ironically, I've traveled a little bit over the last year, and you get out of California, and you do see a lot of other states that are almost back to some sense of normalcy, if you will. So it's been very restrictive here. So I do think we're climbing out of this nosedive, and I suspect, as Nam mentioned, probably by the end of the summer, certainly maybe August, or thereabouts.
Yeah, because this virus seems to do better in cold weather, doesn't it? Didn't it seem like in the
people
summertime?
are more indoors, so they're closer together in theory.
Yeah.
So yeah.
Oh, that's okay. I thought it maybe had to do with the actual virus itself, like it likes the cold, but yeah, I don't know about that.
Yeah.
All right.
So I'll end it too with we will have the results for the Pacific Private Money Fund for March. We have preliminary. It looks like we did an annualized return of about 7.4.
Oh,
So,
good. Okay.
Very
Still
consistent.
staying
with
very
the,
close to the 7. You're always trying to shoot for close to 7.5.
Yeah, exactly.
And then if
So-
people compound, then it adds what, about 35 basis points? to
Somewhere
that?
around there, 30,
Okay.
35.
Yeah, so you're talking 7.75%.
Yeah.
And
Yeah.
and that's not bad at all. And the Freedom Fund, what kind of rate of return are you paying on that?
It's a fixed 6%.
6%.
So it's fixed 6%. The Northstar Capital Fund target is 8 to 10%, and the Southwest Note Fund is what, 7.5? Is that fixed return?
Yeah, that's a fixed
Yep.
return. All right, if you guys are ready, we're going to have our thoughts for the day here. Do origami artists fold under pressure? And what's the difference between in-laws and outlaws? Outlaws are wanted.
Indeed.
You made those up.
That's yeah. Well, we're assuming that all of our in-laws are loved like everybody else. So, all right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
So long.